Welcome to another Market Matters Weekly video update. I'm Nicholas Forsyth, Director of Market Matters. I'm joined by James Gerrish. James, welcome.
Thanks, Nick.
James, just wanted to kick it off with the market at the moment, down 70 points right now as we speak. Should people be panicking, or is this a nice buying opportunity?
Wrote this morning in the report that we think it's a buying opportunity. March is typically a fairly mundane period for the market after the February reporting season. We then go into a seasonally strong period in April. So that's how we're positioning. We've bought a few things this morning. We bought NAB and some primary healthcare. So we're using it as a buying opportunity.
Okay, just wanted to touch on our view on banks. We talked this morning that we're going to sell our CBA over the coming months. Keep holding our ANZ for the dividend, and we're looking at NAB and Westpac. As you said, we just bought NAB. Just quickly wanted you to step everyone through our rationale behind the banks at the moment. So
CBA is on a different cycle to the other three majors. So CBA's already gone ex-dividend. NAB and Westpac, ANZ are going ex-dividend in the middle of May. So that's what we're trying to pick up. So we bought NAB this morning. The May divvy, April will probably trim CBA at the back end of April if it has a good run up in April, as this seasonality suggests that it will. Markets are typically strong in April. Banks are a large component of our market, so banks typically do well out of that period as well. So it's just doing around tweaking around the edges. This is a pretty it continues to be a tough market to get returns out of, and you've got to tweak your portfolio around the edges to sort of get that better or above market return that we're all sort of looking for. Okay,
next thing I want to touch on is miners. We bought a little bit of Rio, bought a little bit of BHP. Rio under 60, BHP around the 24 mark. Did well on a bit of a short-term position on Fortescue that hit our target level. Now they're off today in the market. Are we going to buy more? We're happy with our positions for now. And investors that don't have exposure, is this a good buying day?
Thanks, Nick. We're comfortable with our positions at the moment, so we've got no plan to add to them at this point in time. Again, everything's fluid, so it depends on price. But right now, we've done well out of our BHP and Rio thus far. We've got gold positions on in Evolution and Regis as well, so that's playing out well. We think the US dollars was going to come back. It's done that. And I think we've got further on the downside for the US dollar. So, the other thing I'd add around our financials exposure, just going back a notch there, was around Macquarie. We sold Macquarie at the back end of last week, took a nice profit on that, and we're reallocating those funds into NAB. It wasn't that we didn't like the financial space, we just didn't like the exposure they had to the US dollar, which we thought was going to fall. So just a slight rotation, a slight tweak to the portfolio in that regard.
Gold stocks seems to be in vogue at the moment. They're up today. For investors without exposure who may have missed the boat, we picked up Evolution at 204, 205, but then dropped to $1.90. And Regis, we adjusted our target upwards to that low threes. Are they a buy around here, or would you wait for better opportunities, for gold to drift off? And is this a medium-term play?
Yeah, we like buying weakness. So, gold. Those gold stocks were weak. They've now bounced strongly. A bit of consolidation in the short term wouldn't be a surprise. And if it all comes down to what the US dollar does. So the US dollar index broke through the 100 point on the index overnight. That's clearly a bearish setup. So our view is the US dollar goes lower. Naturally, that will be supportive of gold, and they should be supportive of gold equity. So, we're happy with our allocation to gold at the moment. Each of their own when to buy it from here. Okay, and lastly, primary healthcare, bought that one this morning, or have a limit order out to buy that one as we speak. Just thoughts around that? Is that more of a technical play, or we like the space as well? Yeah, like the space as well. So we combine our bigger picture macro views on what sectors that we want to be involved in. We then look at the individual stock on a fundamental basis, and then finally on the technical level around when to go in there and buy it. So, for mine, primary ticks a lot of those boxes. We like healthcare on an overall basis. They've been through a tough couple of years, primary, particularly in their GP operation. Pathology struggled a little bit over that last couple of years, but they're doing a big turnaround phase. So we think that's got traction. And then finally, from a technical standpoint, it looks good on the charts. It looks like it's going higher for us. So we put 3% in it this morning. Okay, awesome. Thanks everyone for watching. Thanks again, James. As always, any questions, feel free to reply to this email, or you can give us a call on the 1300 number, 1300 301 868. And we will either give you a call back in person, or we'll answer it in the Monday report. Thanks for watching.